technical analysis. Technical analysis will allow you to make better trading decisions. And what technical analysis is it's basically the study of historic price movements in order to make accurate decisions of what the market may do next. So in other words, how to more accurately determine what the price of a security will do next. Now for today's video and probably all of my technical analysis videos, I'm going to be using TradingView. TradingView is completely free to use. Just search it up, create an account, and you should be able to see something like you see here on the screen, okay? Now, a couple of different things I want to quickly mention here to help you guys out with today's video. Number one, notice that at the bottom of the chart, you see the volume for that particular time frame. So what I want to do is I want to go ahead and hide that for now. Sometimes they can interfere with your technical analysis. So I'm going to go over here to volume and click on the hide button. Next thing, it's very important to know where you find the different time frames. For today's video, I'm going to be using the 1-day chart, but I'm sure you guys have heard of people using the 1-week chart, the 4-hour chart, and where you find that is up here. You click on this button and this will give you multiple different options, and I'll have to make a separate video where I go over the different time frames when you would want to use each. But for today, I'm going to use the 1-day chart. Next, when you go to search for a security here, for example, I'm going to be using SPY today, you'll notice that you will see multiple different options with the exact same symbol. Why is this? Because this same security is traded on different exchanges. The exchanges can be seen all the way over here to the far right? And so I'm going to be using the one for the New York Stock Exchange. So I'll go ahead and click on that one here. Finally, guys, this is a line chart. For a lot of your technical analysis, you're gonna want to be using candlestick charts, okay? And where you find that is you go up here to the top and you click on this line button, and when you click on it, you will see an option that says candles. So we'll go ahead and click on candles, and you should see something that looks like this, okay? Now we first need to go over how to read a candle, okay? So let me go over to this image here. And let me quickly go over this here right now, guys. So as you can see, we have two different candles here. Now, what a candle represents is price movement over a certain period of time. And that period of time will be whatever time frame you choose. So since I'm using the 1-day chart, each candle that you see here on my chart will represent price movement over 1 day for that security, okay? And as you can see, there is a red candle, or there's a red candle, there's a green candle, okay? Now a candle is composed of two parts. We have the body and we have the wicks. And here's how you read it, okay? So let's start with the green candle. So for the green candle, at the bottom of the body, this tells you where that particular security opened on that day. The top of the body tells you where that particular security closed on that day. So if you see a green candle, it practically is telling you that the stock had a green day that particular day. Now, when it comes to the wicks, the bottom wick at the bottom tells you the lowest price it reached on that particular day. And then the wick on top at the top tells you the highest price that particular security reached on that day. Now for the red candle, it's the same exact concept, except it's kind of flipped, because if you see a red candle, it basically tells you that that security had a red day on that day. And again, this is using the 1-day chart as an example. And so the top here of the body would tell you where that security opened on that day. The bottom of the body would tell you where it closed on that day. And then again, we have our wicks. So this up here would tell you the highest point it reached. This down here would tell you the lowest point it reached on that particular day. So let's take a look here at a quick example. So if we go over here, and this is still using SPY, let's take a look here at this last candle that we see. So again, since I'm using the daily chart, each candle here represents price movement over 1 day. So this green candle represents basically 1 day for SPY. And of course, This is for June 24th, which was yesterday. We know SPY had a green day, so this candle is green. And again, the way you read this is at the bottom of this body, which is around 381. That is where SPY opened up yesterday. And then at the top here of the body is basically where SPY closed yesterday, which was around 390. And you can actually see this green line here, which tells you where it closed, the last close, right, which was 390.08. Okay, so that's how you read candles. Very important thing to understand. So now that we understand that, how can we use these candles to identify trends? So now let's go back here to our main chart and let's talk about how we can use candles to make better, accurate decisions. So what we're going to do is we're going to first start with talking about uptrends. Okay, now an uptrend is characterized by making higher highs and making higher lows. And so let me explain how that works. So what I'm going to do is I'm going to start drawing some lines. So to draw the lines, you go over here on the left, and there is this button here, which allows you to draw different lines here. So I'm going to start by using this trend line here. And so what I'm going to do is I'm going to start over here, okay? So this was around February 1st. So here I'm going to draw a trend line, and I'm going to, or just a line here, and I'm going to go up here to the high. And then if I click Alt-T, it allows me to draw another line. So then I'm going to go here. As you can see, SPY had a pullback down here, and then it shot up again up here, and then it had another pullback down here, and then it did another push to the upside here, and then it pulled back again. And so we're starting to see a pattern here, right? What is the pattern we're seeing? Well, like I mentioned, we started to see higher highs and higher lows. So as you can see, we started here, it went up, then it went down. This was a higher low because this was the previous low right here, right? So when it went back down, it was higher than the previous low. Then it made a higher high because this is higher than the previous high over here. And then it went back down. This was higher than the previous low. So we saw another previous low. Then it went up higher. So another high, right? Higher high, higher than the previous high. Then it went down. And again, this is a higher low, higher than the previous low. And as you can see, it continued this pattern for quite some time, right? So then it went up here. It made a new higher high, went down, made a new higher low, went back up, new higher high, went back down, new higher low, went back up, new higher high, right? And so on and so forth. So what does this tell us? This told us that the market during this time was in an uptrend. And so I'm sure you guys have heard people mention before that you want to follow the trend, you want to ride the trend, you don't want to trade against the trend. So basically by just identifying the trend, this can help you add accuracy to your trade. So during this time, you generally wanted to be buying stocks. You didn't want to be selling, you didn't want to be shorting. Now this is not always going to be the case, but generally speaking, right? That's what you want to do when you see an uptrend like this. Now, what I'm going to do here is I'm going to go ahead and draw a trend line, okay? So let's take a look here at how we draw a trend line. So to draw a trend line, when you're looking at an uptrend, you want to connect two lows, okay? Now, you only need to connect two lows to draw a trend line, but you really want to connect three to confirm it, okay? And so let me draw a trend line here. So I'm going to go ahead and actually just use an extended line here. And so here are the points that I'm going to connect. So I'm going to start here on February 1st, and I'm going to draw a trend line like this, okay? And as we'll see, this is hitting multiple different points here. So as you can see, this line here, right? There are multiple different lows that hit this. So we had a low here, it hit it, it bounced up. This went back down, this new low, hit it, bounced back up. Down here, another low, hit it, bounced back up. Eventually over here, another low, hit it, bounced back up. And then what happened over here? We saw that here, it broke this trend line. So what's nice about trend lines here is that trend lines a lot of the time serve as support and resistance here. And we actually saw that here, right? That's why we saw it bounce off this line multiple times. So this trend line can definitely help us out with our trades. But again, I'll make a completely separate video talking about this. But what you can see happened over here, right, was when it broke this trend line, this security, which is SPY, kind of dropped quite a bit, right? It went from around 455, down to 420-ish in a short period of time, okay? So now let's go over here to this side, which is basically SPY from January to where we're at right now. And let us take a look here at this now. So here was the peak of SPY back in early January. And so let's go ahead and draw some more lines here. So let's start here and let's see what has happened to SPY since then. So we started here, and as you can see, SPY had a pullback here, and then it tried to go back up. But what happened? It actually created a lower high here, right? Because here was our previous high, and then here, when it hit this, it reversed. And so this became the previous high. This was lower than the previous high here. So it actually made a new lower high. And so we take a look here, it went ahead and it dropped quite a bit after this. So we see a couple of things that happened, right? Not only did it break through our trend line, but now we started to see that SPY started to make lower highs and lower lows, because here it made a lower high. Here was our previous high, this was lower. So this was a lower high, and it started to make lower lows because here was our previous low, and now here was our new low. So this is a lower low. And then what do we see? We saw that it came back up. It actually hit this trend line here that we drew. Again, I'm not going to get too much into that part here in today's video, but then it came back, bounced back down, and what did it do? It created again a lower high and a lower low, because here was the high, here was our previous high, so this was lower high, and then here was our previous low, here was our new low, so it made a lower low. So at this point, right, knowing what I've told you so far, you would have been able to look at this and say, okay, now it looks like we are in a downtrend, right? And so during a downtrend, like again, a lot of people say, right, you want to try to follow the trend. So during this period now, you probably didn't want to, buy anything new. You probably wanted to short the market, buy puts, right? Anything that's bearish here. And so let's continue here and see what happened next. So it came back up to up here, and it basically tried to go higher than our previous high, but it did not succeed, right? And so if it had gone higher than our previous high, it could have signaled a reversal, could have signaled that the current downtrend was broken, but it didn't do that, meaning the downtrend still continued, right? So we were still at this point in a downtrend. And then what happened here, right? What happened was it crashed pretty heavily here. As you can see, went down all the way down here. Again, it made a new lower low, and then it went back up and made a new lower high, and then back down, made another lower low, and then finally we are right here, right? So as you can see, we can see that we've been in a downtrend since January, right? And again, that's characterized by seeing lower highs and lower lows here, okay? So what do we want to see here then for this to break the current trend, and so that we feel comfortable, purchasing more stocks? Now, again, there's a lot more to it than what I'm sharing with you guys here, but we would want to start seeing the trend change here. And so we would want to start seeing new higher highs and new higher lows, right? So we would want to start seeing something like, maybe here, higher low, and then going higher, higher high, and then, higher lows again from here, and then, so on and so forth, and, bounce up that way. We'd want to see something like that, right? But of course, right now, so far from what we're seeing, right, we keep seeing lower highs, lower lows. We're still in a downtrend. So just knowing this information, right, it should be very useful for a lot of different things here. So anyways, this is all I'm going to cover here in today's first video, guys. If you have any questions about anything I just talked about, feel free to leave them in the comment section below. Check out the Discord, link to it in the description below. Hope you enjoyed the video. Let me know what you guys think. And I'll see you guys next time.